afternoon, everyone. My name is Desiree King. Welcome. Hope you're having a wonderful long weekend. And I'd like to welcome everyone to the Senior Living 411 series. My name is Desiree King. I'm here today with Joshua Bacchus, and we're here today to talk about the 411 on retirement planning after COVID. It's been a long 4 or 5 months. We've all been cooped up. So many things have been affected. But one of the main things that we're realizing is that with COVID, there have been a lot of losses in the stock market. There's been a lot of uncertainty, and it's definitely affected us when it comes to our retirement. So today I have Joshua Bacchus here with me. Joshua is a licensed insurance agent. He's a mortgage agent. He's also a certified accountant. Joshua comes to us as a certified financial planner, a registered retirement consultant, and he's had over a decade in the financial sector. Joshua, can you tell me more about yourself?
Thank you for having me on, Desiree. I appreciate it. Well, I started off in the financial industry at a very young age. My father has been in the business for about 50 years, and I started to follow in his footsteps. And after that, I pursued my education and my post-secondary, focusing on the financial aspects of things, and then carrying on to accounting. First I went to Humber to do major in finances, and then I continued on to Ryerson to get my accounting degree.
Okay, so I guess you're like a one-stop shop, and that's why I like to look at myself as well. When you come to me for anything dealing with seniors and their living circumstances, I have access. If I don't know myself, I have access to everything. In your case, you're a one-stop shop. You give financial services on the full gamut of services. So I'm sure you see and you hear a lot as well, right? Would you say that your father's working in this industry definitely had an impact on you stepping into this as well?
Absolutely. I think, again, seeing the need for people to how important finances is to everybody.
Mm-hmm.
And because it's not just one aspect of finances, we're talking not just savings or buying insurance or
Yeah.
paying down a mortgage or saving for retirement, but and also again in the tax planning areas. So all of these things come full circle, as you're saying, of how do we manage all of these things? How do I save to make my taxes more efficient and pay down my mortgage while saving for retirement? So all these things go hand in hand. And that's why, as I looked at it, I became more fully rounded, because as my father focused more on the investments and taxes, I was able to focus on the other areas as well as the areas he was focusing on, for us to complete that full circle of services for people.
Okay. And where do you find, at what point do you usually find your clients? Is it usually, when they come for their accounting and then you introduce this to them, or is it during the retirement? How does this all come together for you?
That's a great question. So in financial planning, it's really in any area of life, right? So they could be at any stage of their life that they touch point with me, but I think it's just like anything in terms of, when we need a doctor, we go to a doctor. And the same thing, people might think, I'm healthy in my financial situation, because they're not reviewing it the way I would review it. So when we go to the doctor is like, well, you have these issues and these issues, and you could work on them.
Mm-hmm.
And the same thing goes for our finances. We might look past those issues, but over time, they can affect us. So I
Right.
think when people are coming to me, it depends on what stages is. Some people might come just to file their taxes, and then that gives me the opportunity to say, hey, are you utilizing your RSPs properly? Are you, are you doing these other aspects of your financial planning properly? And then the same thing goes for other people that might run into a financial issue. They have credit issues or problems, and then they all of a sudden says, hey, I thought of calling you. So
Yeah.
I think, once people know what you do, then they know that you can be contacted for, just like the doctor, to help them. And that goes back to the other question you were saying, like, we saw how important nurses and doctors were through this whole COVID, and all the first line workers. And we are very thankful for everything that they've done to help us get through this COVID and put themselves on the line and put the risk. But even from an accountant point of view, we had a lot of work too. I'm not gonna say like we're no comparison to the doctors and the nurses,
Yes.
but with everything that came down, the changes with the government and coming out with all of these subsidies.
Yes.
And you mentioned in your opening that people are worried about their investments. So after they probably got all that information, or if they never needed to contact a nurse for COVID, guess who they're calling? They're calling us.
Yes.
And we were managing a lot of communications during COVID, again, to talk, because they don't know about getting the subsidy from the government. And even though all this information is readily available, your clients still depend on you to help explain it to them.
Exactly. Now, I know you deal with families, you deal with personal taxes. Do you also do corporate tax? I have someone asking that question who's viewing the show right now.
Yes. So again, I've been doing corporate taxes pretty much. Well, one of the things is, again, we do all types of taxes.
Okay.
And my father focused more on the personal, and I, in the last 10 years, been focused
on the
corporate. Yeah.
Okay.
So I'm more corporate taxes, actually.
Okay.
But of course, trained in everything, and the personal
everything.
taxes is definitely key as well.
Right. Now, when we narrow it down to COVID in particular, do you think it's impacting people being able to retire as soon as they planned, or has it set back some people, in your opinion?
So in terms of it goes a couple ways, right? Because the people that are already in retirement, they might have not been affected financially so much by the COVID. And the reason being is they already have consistent pensions.
Right.
They've already been getting their pensions, and they have their RIF income coming in, and these kind of things. And these things wouldn't have really have affected them as somebody that has been employed. Right? So somebody that's already in retirement, and if nothing really had changed during COVID, their pensions income and the retirement income shouldn't have really changed their situation in the financial. Now, but somebody that is maybe approaching retirement, or maybe even 10 years away, this could affect them, yes, because we have a plan for savings, right? And now our savings could have been affected because we had to draw down on it during this COVID, where we're not able to work. The subsidy wasn't enough to cover our income. And so now we had to pull from our savings that now postpones how sooner we can be able to retire. Also saying a lot of us had to postpone our mortgage.
Yes.
Right. So a lot of people, while postponing our mortgage, now we have to when we with our mortgages coming back up in October or November, we have to be prepared to pay those. But again, how does that affect the amortization and our terms? And if we're nearing retirement, we know we might have to carry those mortgages into retirement. Exactly. So one of the goals that people always have on their minds is, I want to pay off my mortgage before retirement. But now that's why financial planning is so critical, because we might not be able to, but how do we still service that in retirement?
Exactly. And I know, just touching on that point, when we were speaking about people deferring their mortgages, I'm not sure if it's true, having been a realtor before, but I've heard that some banks, if you've deferred your mortgage and the time comes up and say you want to refinance, you're not able to for a certain amount of time. Is that something you've heard about? Or I've heard that through the grapevine.
It might be that they would have to talk to their specific banks or lenders that they're dealing with, but just from where the normal banking guidelines is, all they did was they postponed it and they added that extra time to the term of your mortgage,
Right.
right? So it wouldn't, I wouldn't say it would affect anything, in refinancing,
Okay.
except for that if you planned for a certain maturity date to refinance, now that maturity date might be extended, and you might, and then, just like a normal refinance before maturity, you would have to face a penalty.
Okay. Okay. So now that we're coming to stage 3 of coming out of this pandemic, and hopefully there's not a second wave. I'm sure this is your first pandemic. We're both in that age group where we haven't been through this before.
This
So
type, yeah.
what changes do you see coming about in retirement planning that people should really pay attention to?
Some of the key things I think that people should focus on are budget, right? Is because as even from now, regardless of age and into retirement, our budget is the most important, because we want to be able to service our lifestyle and our expenses.
Yes.
And right now, one of the key things that would have forced us to do it during COVID is have a budget if we haven't had one yet. Why? Because our cash flow is limited, right? And so, I think one of the things we would have to force ourselves and train ourselves to do, even in retirement, is to understand that income is limited. I always tell my clients that money is scarce. Unless if you have a money tree growing in your backyard, that's great.
I'd like a
I
clip of that
don't.
branch. Yeah.
Unfortunately, I don't. And
Okay.
so every dollar that I make is
Yes.
very scarce, and I have to decide, what am I going to do with that dollar? Am I going to save for retirement? Am I going to pay down debt? Or
Yeah.
am I going to spend it on some other means, right? So that dollar is scarce, and I have to decide what to do with it. And right now, with us, as we say, that a budget is very important as we go into retirement, and how that could, again, I think if people haven't thought about these things before when they were going into retirement, they were just like, yeah, my CPP, OAS, and all of these things are going to be sufficient. I don't know. And I can't, and when my clients tell me that, I tell them straight to the face, I don't know, because I'm an analytical person. I need to review your numbers. And once I could tell you that these numbers make sense, then I feel more confident that we are on the right track. But just to tell you that the income you're expecting to receive on a piece of paper may be enough, from either your pensions or from what you're expecting from the government.
Right.
So how do we really know? Right. So I think these are things we were comfortable with before in when we weren't really evaluating. But now I think it is very critical to evaluate our budgets and how much income we're going to receive and living within that income. That's number one. Number two is our credits, right? How much debt level are we going to have going into retirement?
Yeah.
Now, like I said, the chances are we might have to take our mortgage into retirement. And there's nothing really wrong with that. Yes, we want to work hard to pay it off. But then the chance, if we used all our money to pay off the mortgage, what may now we live on during retirement?
Exactly.
Because, one of the things my father tells his clients is, you can't eat brick and mortar. Meaning, if you paid off your mortgage and then retirement, what are you gonna live off of, right? So this is where that financial planning goes hand in hand. What do we do with that scarce dollar? We needed to live off of, but we also needed to pay off debt. So I would say watching debt levels as we go into retirement, because even as COVID has shown us, if we're not living in that budget, then if that income's not coming in, how are we spending on credit? And if we are taking that credit into retirement, how are we going to pay it if we don't have that income coming in from employment? Because our income is limited, right? So I think all of these things are very critical to look at as things have changed, because we want to have a certain lifestyle and we want to continue to have that lifestyle in retirement, but then we got to evaluate, because normally, it says about 70% of our income, it's only about 70% of our income we would get in retirement, right?
Mm-hmm.
Based on what we get today.
Mm-hmm.
So, so I think that, and again, not to say that having a mortgage is a problem, you just
Yeah.
want to be able to make sure you can service it for the rest of those years you need to, and until it's paid off, and that you could continue to live comfortably and not live in debt or struggle with the income that you are receiving at that time.
Now, you touched on so many valid points. One thing that came to my mind as you were speaking is, what do you tell someone who is not earning enough money right now towards their retirement, or someone who's self-employed, whose income is uncertain? What advice would you give to someone like that?
So right now, again, we are, in a period where we're not knowing what's going on with the jobs. A lot of us have been laid off, and we are uncertain if we're going to get those jobs back and these kind of things, right?
Mm-hmm.
But as I'm saying, we need income, so we need to look at opportunities to get those income, and I do see a lot of opportunities coming out after COVID. And the government is doing a great job. I must say, I give compliments to our government for all of the things they have done to subsidize, to help businesses. And I believe they will continue to create more opportunities for us to make sure that we can have those jobs and be okay. So one of the things I would say, and the major things is that if we are in an area where we feel like we're not getting that income we need, or we want to grow ourselves, and we need to upgrade our skills, right? We need to upgrade. Okay, what do we have to do to position ourselves in this time to be more of a resource to something that I want, or to get that extra income that I need, right? And that's where, again, where we look at the government has opportunities for second careers and these kind of things, that it doesn't matter what age you are, you can still get these second career opportunities that can maybe give you the income you need to help you meet those goals in retirement. And that goes to another point where, even for myself, I could say I could have stayed just a financial planner. But the reason I say, no, I want to upgrade my skill to be a retirement consultant and also focus on that area is because I know the demographic of retirement is a large demographic. So I made sure I have rounded my skills to be a resource in that demographic.
To that demographic. No, that's exactly true. And for those of you who are just joining us, you are joining the Senior Living 411 series. I do have Joshua Bacchus here on with me, and we're discussing the 411 on retirement planning after COVID. So Joshua, again, okay, so gain extra skills. That's definitely something that we have to do, something that I'm always doing, and something I always fully support. Now, how soon should someone begin planning for their retirement now? In their 30s, in their 40s, different ages, different stages. We know people are living longer as well. That's also another factor. So because we're living longer, do we start planning later, or do we still keep planning sooner, or when do we start planning?
I think financial planning is at every stage, as I mentioned, and retirement, doesn't, it couldn't start from 20, and I'll explain how. But, for maybe a good retirement plan to make sense would be 20 years, because then it gives you that outlook of what I need to do to save, how to pay down that debt if you want it to work that way. And then 10 years, and you would review it, in the 10 years, how am I looking? And then 2 years before retirement, am I prepared, to retire? So at every stage, I'm looking at my clients at those various stages. So when they're ready to hand in that that letter of retirement, they they're confident because we've been working with them every stage of the way. But that's why I say I would start from any stage, right? And so from even at a young age, from somebody that's 20, we use an RSP, because one of the major things that people can do to save outside of their pensions and what they receive to government, and as I was saying earlier, it's critical for us to save for ourselves,
Yes.
right? And you use that RSP to do that, and that's a great opportunity, because um, you not only get a tax refund from using the RSP, but the government also gives you opportunities to use it for a first-time home buyers plan, right? So that could use for your first down payment of your house. And you could also use it as a lifelong learning plan.
Right.
So these are things that if you are planning throughout your life, it's not just for retirement, that you can
Right.
utilize it at the different stages, but then you're going to put it back into the RSP to use at retirement when retirement comes.
Okay.
Right. So these are things. So critical things is like looking at the, like I'm saying, as soon as we can, I would start to look at your retirement plan. It's not like we would fully, but maybe 10 years now, I'm really starting to give analysis, give us scenarios on those finance. How is your retirement going to look like, right? And then we start to analyze it in that sense. And again, giving detail of, how do you want to change where you're living? Do you
Right.
want to move to a retirement community? Do you see yourself traveling? So these are all things that we focus on when we start to get into that nitty gritty. And like I'm saying, that's where the two aspects of the budget come in. Because then I have 10 years or 20 years or however long timeline to save to meet those goals, to make sure I have enough income through my retirement to live that lifestyle, right? But if I started later, or if I just started my retirement plan and I've already retired, then those goals might be hard to meet if I don't have the resources to do it. Right. So this is where those important factors of the earlier the better, because then you have time to plan for it, and make sure the money's there and the funds are there to live the lifestyle and meet the goals that we want.
But now, are you like a doctor where we come for a once a year checkup with financial planning and make sure things are in order on the same, like, so how often would someone see you?
Absolutely. So for me, I would prefer an annual checkup, right? Not everybody is, does that, but I like the touch point with my clients, just because things change every year. I always tell my clients that your financial plan is not written in stone. It's not like the 10 Commandments where Moses says, thou shalt, things change in our lives, and they can change in a year. And, anything, you can have a baby, whatever happens, right? So then your financial plan needs to be adjusted and analyzed, to meet those things.
And again, I know you touched on having debt, and ideally we want to pay off our mortgages, but there's also good debt, like having investments, like other properties. So is that something as well that I guess is part of a retirement plan, owning additional properties for retirement income? Is that something you consider good debt that you would recommend to people if they're capable of doing that?
Yeah, I mean, I have quite a bit of clients that do like the real estate. They do like real estate investment. And personally, I don't see anything wrong with real estate investment. I think that it's always, historical. I'm always looking at historical trends and past performance, and we see that real estate has always gone up, right? So, and again, you get enough properties under your belt in retirement, that could be your pension income, right? Because that rental income coming in, not only can it service the debt, but then it's also paying your lifestyle, right? So, there are opportunities there, I think, that are great. But as a financial planner, again, in the financial plan, we would do to something that would address your asset management. And in that, we would address your risk tolerance. And these are things we would want to know. Are you, as you were saying, do we have that risk tolerance to invest in not only real estate, but any type of investment, a certain stock or mutual funds or whatever that is? Because again, it's something that should have shown us, not even in COVID, but even what happened with the subprime mortgage crisis. People are very emotionally attached to their money, regardless. And
Yeah.
that's why, even as you opened up and said, with the with the markets uncertain, yeah, with
Mhm.
COVID uncertainty, and that's why we're getting phone calls, because we manage people's money, right?
Yeah.
So the issue is that people are emotionally attached,
Right.
and regardless if it's real estate or mutual funds or whatever type of investment is, you want to analyze your risk tolerance, because it's one thing to have stress when you're not retired, but one thing in retirement, you don't want to be stressing about how your money's invested. You just want to know that, your money's there, it's invested the way you want it to be invested.
Mhm.
You're okay with the risk that it is, and it's giving you that return that you're expecting.
Exactly. And also, you're planning for a lifestyle, you're planning for your daily, bills or traveling, whatever you want to do. But what about when the what if happens? So someone falls into a situation where they fall ill, they're not as mobile, they want to stay in their home. They may want to convert the family room into a bedroom and put a bathroom down there. Is this stuff that you look at the what if scenarios as well when doing financial planning for someone in their older age as they go through the later stages of aging? So their 70s, 80s, 90s. Is that something you look at as well?
Absolutely. As we look at the different scenarios in retirement, we're looking at, again, at the stages, and anything what could happen, because again, you're looking at some of the questions I ask are what happened with their past medical history with their family and their
Okay.
moms and their dad. So they kind of give us an idea of what may be medical issues that are in their family, what they could expect, or what are existing, and what could happen. So, for
Right.
example, somebody's already having pain in their knees or their legs and says, I don't think I can walk up and down the
Yeah.
stairs anymore. So then I plan it out. Okay, what would it look like if you downsize to a condo, or if you had to renovate to put a stair lift in, or what those things. So at various points, I am looking at the different scenarios of those different stages of what that retirement could look like. And also, we want to make sure the funds are there to meet it. So if they needed to make a renovation for whatever reason, I would make sure I have set aside the fund and the funds in the financial plan. And even if they didn't need it, we know it's still there.
Still there.
And I think that's where, again, and this goes for any age, emergency reserves. We need to have emergency funds available. Otherwise, we're going to credit.
Yeah.
And then if we go to credit in retirement, how are we going to pay it back?
Hmm.
Right? Because again, our income is very limited, right? And same even when we have employment income,
Yep.
how we're limited on how much our daily living
Yep.
costs and things like this, right? So I think these are important things that we do got to think about when in
Yeah.
every aspect.
Definitely. Touching really quickly on reverse mortgages. What is your opinion on those? Because I know some people would say, well, I have my home, it's paid off for. Let me look at a reverse mortgage. And I always say to them, in my opinion, it should be your last option because you don't know how long and you can end up not having this asset. So, what is your opinion?
It's a scenario by scenario basis.
Okay.
And that's why I wouldn't just say, it's a bad
So,
or good thing, because we would want to know more, what is that situation the person is going through that you may need to do a reverse mortgage.
right.
Because if we did a financial plan and we're getting CPP, we're getting OAS, you're getting other pension from, maybe from wherever you worked as an employer, or we saved adequately enough for our expenses during retirement,
Mhm.
then do we need a reverse mortgage, right? But if my cash flow is limited,
Right.
then am I depending on this now as a final resort? To because to pay off debt or all of these things in a budget, to utilize that reverse mortgage, right? So it is a scenario, and we've had cases where people get sick.
Yes.
And what else are you gonna do? You need the money. Money doesn't mean anything when somebody gets sick.
Yes.
So that's why I say it is a scenario by scenario basis. And but from a retirement planning and estate planning all go hand in hand. And a lot of people kind of put their houses as the inheritance to their children.
Yes.
So that's another aspect to think about in a reverse mortgage. Well, now that doesn't become an inheritance anymore.
Exactly. Exactly. No, all very, very good points. And it's amazing how time flies. There's so much for us to talk about. I guess when talking about finances on the whole, uh, what would you like to leave our listeners now and future listeners with? Like, give me your top 3 tips you would give us.
Well, again, it's very critical to have a financial plan.
Yeah.
And, you know, as you opened up and you said that, you know, covering the whole financial circle, that we're a one-stop financial shop. And that's where I think when we, you know, when we are just focused on either just buying life insurance, or we're just focused on savings, or we're just focused on paying debt, then we're not getting the full financial plan, because then we have pieces of the puzzle, but we're missing the full picture of the full puzzle.
Right.
And one of the things I tell my client, I'm like, when you're doing a jigsaw puzzle, I said, how do you put those pieces together? What do you look at? And they said, well, we look at the picture. And I said, exactly. So in order to know how all these pieces fit together, you already might have them. You already might have an RSP. You already might have a great pension at work. You might already have, you know, life insurance and all of these benefits. But how do all these pieces of the puzzle fit together? And do we wait until something happens, like COVID, to figure it out? Or do we want to know beforehand, how do I manage it? I'm already prepared for these things.
Right.
I know what coverage I have, and I'm ready for whatever rainy day that could happen, right? So these are things where I think the financial plan is critical, so that you know, do I have enough life insurance on my life?
Right.
Do I need proper disability or critical illness insurance? Am I saving adequately for retirement? Am I going to be tax efficient in retirement, and making sure I'm not overpaying taxes by receiving, because you can receive too much income in retirement because you have great pension, you save
more
too much
taxes
RSP, you get a reduction in OAS. Nobody wants that, right?
Yeah.
So it's great to plan it out so you're maximizing your benefits and still keeping the money in the bank.
And what I like about what you do, like you said, you've decided to put all these skill sets together, is that the left hand is talking to the right hand. So it's not like someone comes to you and you don't know this and someone else knows this and they've got to try to put these pieces together. You're in the box, like that puzzle. You're the box with the puzzle. Here's the pieces, here's the picture. Just let me help you put it all together, right?
Yeah, I think I think like from just that doctor point of view, when you go to your general doctor, he kind of knows all of those aspects, but there's still specialists required.
Specialties, yeah.
So for me, I still work with other people hand in hand, like yourself, that are specialists in certain areas that I cannot be a specialist. There's only so much I can talk about their living aspects and how much health and what they would need. Things I really don't really know, that I depend on you to talk about, that you're the specialist in. So I think I have my general areas, but I rely on my network of specialists now to focus on the investments, on the mortgages, on the insurance, and all of these other areas.
And exactly, and that's how things click together. If I have a client that I know needs to make XYZ renovations to their home and they want to know how, it's where I would call you in and say, well, how? What does this picture look like? And we make it all work out. But the key is, it's the 5 Ps. Proper preparation promotes peak performance. So if they're prepared, then whatever hits them, whether it be COVID, whether it be a life situation, they're prepared to handle it effectively without causing as much strain on them, which can lead to other health challenges as well.
Absolutely.
And we all know finances is one of the #1 reasons for stress, for marital challenges, for so many other challenges we have in our life.
Absolutely.
Right? So I mean, it's been wonderful having you. How does someone get in contact with you? What's your website? What's your email?
Well, I'm sure we will. You could contact Desiree, and she'll definitely be able to provide all of that things to you. So, I am available, and I'm looking forward to talking to anybody and any consultation you need. I know it's been very difficult times, but I am open to consultation regarding your finances and your retirement,
Right.
and I'll take it from there. But they could contact you, and you could definitely provide
Sounds
me
good.
with
And
that
are
information.
you having Zoom meetings now with clients, or how are you?
Yeah, like I'm very open to I'm like millennial, right? So I'm very 21st century. I was very prepared for COVID. I was already working virtually, so
Right.
uh for me yeah, I was already COVID before COVID. That's what I tell everybody.
I think I was too, because you're already working at home, you're already set up, so it was just an extension of what you're already doing, right?
Exactly.
Okay. Well,
So I,
Joshua,
I
thank
am a virtual financial planner accountant. That's
you. Are
I completely see myself as a virtual.
awesome, awesome. Well, Joshua, thank you. We are definitely going to have you back because I know there's so much more we can delve in. Today, we've kind of skimmed across the top of most of the things that you do, but definitely do look forward to having you back again. And thank you again. My name is Desiree King. I want to thank everyone for joining us today. And I want to invite you to join us on Sunday, August the 16th at 7 p.m. for the 411 on working on the front lines during COVID. I have two student nurses that I know, second and third year nurses, who, one thing about the millennials I found is that COVID happened, and we always, we tend to talk about them sometimes as not being as enthusiastic or not being as passionate. What I've seen from the millennials is pure passion, because I've seen these student nurses 20 and 21 just jumping right in there, working on the front lines to help us get through this. So looking forward to that conversation on Sunday, August the 16th on the 411 on working on the front lines during COVID. Once again, my name is Desiree King. I want to thank you, Joshua, for joining us today on the show. And everyone, just have a wonderful day. Thank you so much.
Thanks.